Good afternoon, everyone. Happy Friday. Happy Veterans Day. Again, if you are a veteran, thank you for your service. Hope you guys are having a great day. All right. Since we were together Tuesday, lots of stuff going on, right, everybody? Gabe Velazquez here with you, Transparent Trading Solutions. Um, so, um, Again, unless you've been living under a rock, you know what's going on. The CPI, the soft CPI or softer or whatever you want to call it, CPI number yesterday sparked a massive rally, which not a big deal. In fact, we just closed out our call positions here at TTS. We just closed our call positions on the SPY right at the end here. So we did really well with that. We did a volatility play going into the hey, how you doing, JT? Yeah, so we closed our calls this right as we were closing down today. We did a volatility play, worked out really nicely. We were also long bonds, TLT calls, so we had a really decent week just based on volatility because nobody obviously expected. In fact, what happened on Thursday, it was I've written about this. Whatever is, I think everybody was kind of positioned short or with the expectations that you were going to have a hot number, and clearly when that didn't pan out, the unwind. And so we saw the whole, this whole kind of corollary that we've been talking about: dollar, bonds, stocks. So, bonds up, stocks up, dollar cratered big time. And, as you guys know, if you've been listening to me here, I've been talking about just kind of on the charts. Again, I'm not about opinions or whatever. We just look at the charts. We listen to the message of the markets. But we kind of been talking about how the charts in the dollar index, the DXY, continually signaled that it was probably peaking, and sure enough, I mean, it took that kind of slightly lower CPI number to really just crater it. And the beautiful thing about that is that also set up for some really great trades. I've got we're looking at copper. Metals kind of stalled out, but copper, remember, I've been talking about copper for the last week or so. We got some trades set up in copper here at TTS. Bonds also. But after it's all said and done, one of the things that's really interesting, let's get into the charts, right? So, clearly the S&P broke above this 39, let's call it 39.38 level, right? Okay. And the next levels I'm looking at are 4,100 and 4,150 on the S&P. There are some minor levels coming up here. You got that major pivot, but we're nowhere near. By the way, we're nowhere near the June high. The August highs in the S&P or the Nasdaq. In fact, the Nasdaq really barely today is just poking above this resistance level. We've been talking about this 11,715 level. So I think, again, still a laggard. The question clearly on everybody's mind is this the beginning of the Santa Claus rally or all that stuff, right? I think it's too early to say. I have to tell you. I mean, yes, yesterday's move was huge, but that's what happens when you have, again, these lopsided markets. It's just order flow. If you got a bunch of people covering massive shorts in the market and everybody pulls their offers, well, the market's going to take off like crazy, right? And so that's really you see that. And again, you've heard me talk about this. The biggest rallies in in points, in percentages. I mean, yesterday the Nasdaq was up over 6%. Okay, you don't really see that in a kind of uptrending bullish market. And so, again, in bear markets or in volatility like this, everybody gets whacked. So if you were short coming into the CPI, you got whacked. If you've been too bearish over the last couple of weeks, I've been talking about this. If you're overly bearish and all you do is focus on shorting, you're getting whacked. And so what's my mantra? Let the charts tell you. Don't get too hung up on all that stuff. Now, in fact, now that the market's rallied quite a bit, and the VIX is dropping below 20, 11,914 on the are you referring to the Nasdaq, JT? Yeah. Well, the best level the best level on the Nasdaq is actually all the way up around the 12,525 area. Actually, yeah. There's some minor levels in there. I mean, if you're going to be just trading on a smaller scale or kind of, but if you think about it, if you go back and look at your, I'm looking at the daily chart. There's like a pivot. There may be something around that 12,250. It's kind of a rally-based drop area right there, but I'm not seeing a whole lot of quality on the supply side, on the distribution side. So we'll see. That doesn't mean that the market is going to just go up like crazy for sure, right? So we'll see. Yeah, for me, I probably I still think we got some room to go, and I'm still of the mode maybe to buy some pullbacks here. And the stocks, I mean, look at AMD. Remember, I've been talking about AMDs. I mean, these stocks went nuts yesterday, right? AMD was up almost 8 points yesterday, and so on and so forth. So, yeah, a lot of the more beaten down stocks are the ones that really got a huge bid. And again, those were heavily shorted. So you get the idea. So in any event, I'm more focused on the S&P because S&P's got some really key levels coming up here more than the NASDAQ. The NASDAQ's still lagging. And if rates, if the 10-year can put together a strong rally, then I think NASDAQ keeps going higher because you remember it's the most rate sensitive of the index just because of all the growth stocks in there. But I'm more focused on the S&P because I get, we are coming into some really key levels that everybody's looking at, namely that, 4,100, I think everybody's talking about. Is that like a 200? What is it? That's like the downsloping 200-day moving average and whatever, which, as you know, I don't really pay much attention to that, but, it's kind of a self-fulfilling prophecy. That also coincides with level above this big pivot from August. So I think, it all kind of lines up. And so that's really the areas I'll be looking at in the S&P. And it's going to be interesting. Next week, we don't really have a ton of catalysts that are going to move the markets. And then we'll go into the holidays. And then I think December is going to heat up again. We got the next Fed meeting, and we got CPI again and so forth. So one reading is not going to really, I don't think it's going to dissuade the Fed from stopping what they're doing. So in a nutshell, on the equities, S&P 40-50-ish is the first level we're looking to short. Pullbacks down to about 3,900. NASDAQ also pulled back down to about 11,323. Russell is also coming into some really decent levels to short against, not for about another 50 points up on the Russell. And then the S&P, the Dow did hit one of our levels, 34K, and pulled back hard, and then just came right back down. Pulled back a few hundred points and then came right back up. If you look at your daily chart of the YM, you'll see it's right around 34K. All right. Now, next thing is the bonds, right? Uh, bonds still clearly not out of the woods by any stretch. In other words, there's still massive amount of supply. Clearly, as with rates as what they've done in the last year or so. The key for me now on the 10-year. So pull up your 10-year chart, ZN on TOS. I think it's TY on TradeStation. Is this one essentially 114 on the 10-year, right? And why is that a key level? Because if you can break above 114 on the 10-year, that clearly has major implications around a lot of stuff, right? Especially on the NASDAQ. And also technically, if you think about it, that would confirm another higher peak, which, we've had attempts at higher peaks in this market. But, the problem was that, remember, in that last drop, we basically made a new low. So now we stalled at 109.11 on the 10-year, correct? So that creates a little bit of a higher pivot low. We've already taken out this 128. So I think, once we get above 114, I think that will also be very critical in regards to, some continuation to the upside and possibly even a major kind of change in the dynamics, maybe a trend change or whatever in that market. Does that make sense? Okay. So that's that's what we're hey Kelly, how you doing? Kelly, did you close out your calls on the SPY this afternoon? Oh, awesome. Yeah, you picked up about $1,000 on those, huh? You should have anyways, right? Okay, good. Good. Yeah, I'm glad. Okay, so yeah, Kelly's one of our members, if you didn't gather that already. So anyways, yeah, so back to this. That's really what I'm looking at. And clearly we still have to pay attention to the bond market, because what can really derail this current move that we have ongoing right now in the stock market is if the bond market decides to pull back hard and rates go right back up again, and so on and so forth. So that's why you still have to be looking at the bond market. Any big rallies this year that were, like we had that big rally from June to August. What really, well, it was the Jackson Hole that basically killed that rally. But and also, that subsequently also as a consequence is when the 10-year just got tanked again. So it's also, so we're going to be watching that very carefully. Okay. By the way, Kelly, were you in the 95 TLT calls as well? Just curious. Did you get into the 95 TLT calls? So good. If you got into those, you should close those out today as well. Those expired today. Okay, good. All right. So I think that really kind of covers what I wanted to cover on the bond market. Really, the 5-year has left some really nice levels to buy on a pullback, but very, very similar to what I've just been discussing on the 10-year. I think we got to get above like 108.22 on the 5-year to really kind of solidify any kind of major change in trends or whatever in the 5-year. So that's kind of what I'm looking at right now. There's some really nice levels coming up above that, but that's kind of what that would be setting up for a nice pullback where we broke out from after the softer CPI number in the 5 year. And I've been talking about that 105.22 that actually did hold. But going into that CPI number, it could have gone either way. So in retrospect, like I tell everybody, 2020 is hindsight, and after the fact, it's all you can always talk about it after the fact, but that could have gone either way, really. So, but now we actually have that behind us, and now we can start focusing on some new setups. And like I've been talking about for the last couple of weeks, a lot of this stuff is kind of playing out. We have the dollar crater. So the dollar now, let's get into that. Obviously, very big market. So once we broke above 109, that accumulation, which we've been bouncing around, and in fact, we had an accumulation still, this 106.69. You can see it. It's a rally-based rally on a daily chart. That seems to be failing, which again is further evidence that this dollar is clearly now. I mean, the only thing that's really going to kind of bolster the dollar, if you will, or at least slow down the momentum, looks like to me like I was talking about this morning with my members. There is a really high probability that the thing goes back to 100, the dollar. In fact, we're looking for if you guys want to play the dollar, obviously the euro futures would be one way to play it. Also, if you want again an options play or the EEM, pull up the ETF, the emerging markets, right? Look at how closely that also tracks the dollar. Okay, so if you guys want are going to take advantage of this continued dollar weakness, which by the way, it's not going to go down in a straight line. We should get some bounces in here coming up. There's another little tiny level. I'm looking at about 106 or so. You can see that on your charts. If you look at it's a rally-based rally on a smaller chart. So it's getting, like everything else, there's going to be a bounce. It's just not going to just fall off the cliff and keep going. But these currencies, as you know, I mean, they tend to get momentum and keep going. But I do believe eventually, probably by the end of the year, maybe first quarter next year, we're probably going to head all the way back down to 100. And there are going to be some tremendous opportunities to take advantage of that. And again, one way you guys can do that I'm going to have an options class, by the way, coming up on Tuesday evening. I'm going to do an evening class for you guys that want to attend. So go to the link below. I'm posting it on Twitter. If you guys want to learn about a little bit more about options, for those of you that want to take kind of a low risk approach, if you're struggling with futures because the volatility is too high, or you're not getting a bunch of levels, that type of thing, options are a great way to go. Is a great alternative. In fact, we're doing really well at TTS on our options plays lately. We're actually doing tremendous. I mean, we had picked up about $1,000 today on our SPY calls and a few $100 on the TLT, that type of thing. So anyways, so if you want to learn about that, again, hit that link below. So at the end of the day, what this is, you don't need to have me tell you. Look at the euro. So the euro is actually coming up to some really nice levels as well of distribution. Look at your around the 105, 106. You can see that the euro, British pound also coming up to a decent distribution up around the 120, and so on and so forth. There's a bunch of, I mean, the currencies just went crazy as you might imagine because of the dollar. And so there are going to be some tremendous opportunities. I've been talking about the yen. There's also some really nice levels approaching. So there are going to be some really good levels coming up in some of these currencies all the way across. I mean, we had spent a lot of time prior to Thursday, just chopping around sideways in a lot of these currencies and a lot of the dollar stuff. But as I was, I've been talking about, now that we finally got this dollar to break and got that price extension, now the opportunities are really starting to kind of present themselves. So I'm really excited about next week across all the currencies. Okay, so we'll see how that goes. Uh, all right. I think I mentioned gold. Yeah, gold 1820 is really going to be the next major level, and there are a bunch of pullback areas in gold that look really attractive. So check out gold. Let's see, similar silver. I already mentioned copper. So all the metals really just related to what's going on with the dollar. Um, there are way too many. I have time to show you guys, but you get the idea here. So that is really going to be really tremendous next week. I'm really getting psyched up about next week because there's so many opportunities coming out. Let's finish up with oil all over the place. Really haven't hit 85. There's a level at 85 and then kind of rallied, and now it's kind of just all over. I think, now it looks like it peaked at 93. And so we're going to probably, that would be the next level if we can get above 93. But I'm really we haven't really traded oil per se because it's just been very choppy. If you look at the price action in that thing, it's been just relatively very choppy. I am interested in nat gas still. We still have the UNG. I think I mentioned that the other day, trying to get back in on that thing. And you can see we had that massive rally in nat gas. It peaked right at that 730 and then fell back really sharply. And so now it looks like it wants to hold around the 570 area. And again, I'm looking to get long UNG as well around the $17 mark on that, and using UNG rather than the options. And on the future side, there are some levels below that in the low fives that I'm looking at as well for our members. Lastly, grains. Still looking at the grain markets. There's some really nice levels in wheat in the 750 area. Corn, we actually have some trades set up on corn, and also in the soybeans. So I am looking at some opportunities there. In fact, we came close to one of our levels, 417, and then we shot right back up again. So soybeans, is another great market that if you guys haven't traded that. So you guys have any questions, comments? Yeah, lots going on. The key for everybody is when you see all these markets doing what they're doing, and you either are on the wrong side of the market or are afraid to take a position because the volatility scares you off, right? Then again, explore some other alternatives like options, with these volatility plays that we've been doing or whatever. So again, if you want to spend 5 days and see what we're doing at TTS, hit the link below. It's absolutely free. I'm not going to hound you to be a member. Don't worry. Right? And also, if you guys want to sign up for the class on Tuesday, it's going to be an evening class. So if you're in California, it's going to be 3. If you're in the East, it's going to be 6. So also, I think that would be. I'm going to make it kind of intro, but I'm going to throw some strategy in there, and then I'll have some follow-up classes as well. And then the newsletter. Give me thumbs up. Tell people where I'm at so we can grow the channel. And so on and so forth. So with that, I'm gonna leave you guys. Have a great weekend. Again, veterans, thank you for your service. Uh, and I'll see you guys on Tuesday. Okay. Have a great weekend, everybody. Take care.